We've got Dhiraj Agarwal, who's our market master of the day, joining us. He's co-head equities, Ambit Capital. Dhiraj, great to have you with us here. Thank you very much for your time. I mean, the market, I'm assuming, has surpassed expectations, one and all, with the very strong momentum we are seeing, Dhiraj. What are your thoughts now from here out?
Yeah, it's been doing well, and for some time we've had a target of 18,700 on the market. Although that target was for September 23, looks like it'll come much faster. I think we are in a situation at this point of time where good news is good news for us and bad news is also good news for us, because relatively speaking, India is doing better. So at this point of time, looks like the trajectory is up.
By the way, Britannia is really surging now, 8% higher on that stock. Remember, Mangalam was telling us a while back that the market share for Britannia has hit a 15-year high. That's no mean feat in a challenging market like this, where every day there are new players coming up in this space. And also, the stock is at a fresh 52-week high as well, so don't lose sight of that. Dhiraj, good morning and thanks for joining in. There's so much happening in this consumption space, right? Of course, valuations are sky high as well. But what do you do with names like this, market leaders who continue to gain ground? Do you back them? Do you put fresh money to work? Or are you a bit cautious?
I think in that whole consumption space, one has to be selective. In fact, not just in the consumption space. I think in most of the sectors at this point of time, you have to be selective. So not all companies are performing similar to each other, and similarly not all valuations are similar to each other. So Britannia is one name we have been positive on for some time. We have been positive on their revised strategy on building adjacencies and as well as expanding the current business. And that is now finally showing up in numbers. We're quite happy about that. But within the entire consumption space, there are some challenges at this point of time, because the grassroots level mass consumption is showing some signs of demand deterioration, whereas the premium categories are still doing well. And if you combine that along with the valuations, one will get a fairly interesting mix of buys and sells at this point of time in that whole basket.
Hi Dhiraj, morning. I recall earlier this year when you were talking about Zomato, I think you were positive on that one if I remember correctly, Zomato from the new age themes. Now in the month of November, you're going to have quite a few of these lock-ins opening up. So if you wanted to look at some of these new age players, whether it's the Nykas, whether it's the Paytms of the world, well, you're going to be spoiled for choice. The question is, given the call that you had on Zomato has worked out, do you think some of these other businesses as well, post the price correction, they're still very expensive, but do they become relatively more attractive, or would you avoid it?
No, some of them are, a few of them are buys. I mean, as you rightly said, Zomato, we've been positive. And in fact, we started a Zomato research coverage with a sell rating, and when the stock fell, we turned it to a buy. We have a buy on, for example, Policybazaar as well, which I think at the current price offers very attractive valuation and long-term growth prospects. But not everything is a unilateral buy at this point of time. One has to take into account the fact that we are no longer looking at a zero interest rate world. We're no longer looking at $20 trillion of global government bonds trading at below zero interest rates. We are looking at 4% plus 10-year bond yield in the US, probably inching higher. So all this is fueling into extremely high valuations and a very easy fundraising environment that's become tight. So one has to be cognizant of valuation metrics at this point of time, given a different macro environment globally. But within that, there are a few strong buys. When Policybazaar and Zomato both are strong buys at this point.
Policybazaar and Zomato. Policybazaar, of course, continues to be, I think it's the only one which is at an absolute new low. I mean, even Paytm, etc., have bounced quite a bit. Zomato, of course, but not PB Fintech, that is Policybazaar. Look at Bank of Baroda, and I think one reason why BOB is sort of doing so much more than SBI is because there was no pre-quarterly update. It's along with SBI, it's constantly rated as one of the top names, well-run banks. There was no pre-quarterly update here, and I guess that's perhaps one reason why the surprise is so much larger. And that's up about 10%. SBI is up about 4% as well. The market's up 100 points now. It's cooled off a little bit, but strong, 18,218. Dhiraj, I mean, so as you said, I mean, if the timelines are sort of 1 year, we are running 1 year ahead. So do you get your targets up a lot more for next year? Or so how does one adjust expectations and what's happening in reality?
I don't think one should keep increasing targets just because the markets have run up. Right? That's like chasing momentum. I mean, it can go a little bit higher. Who knows? It's difficult to catch the exact points. But one thing, as you would have noticed, is most of the mega caps, and especially the mega caps which are slightly expensive and richly valued, are struggling a tad. So, I mean, think about it. I mean, the commentary I've heard from the anchors on CNBC today that the market's looking very, very strong today, but it's up only 100 points, which is about 0.5%. So that's how the mindset has changed, that now we find 0.5% rallies as very, very strong days. Earlier, you wouldn't consider a 0.5% move as anything which is out of normal. But at the same time, there are names like Bank of Baroda up 10%, SBI 5%. Despite that, the index is up only 0.5%. So I think this continues. The tussle between overvalued mega caps and more reasonably valued mega caps -1. So still large caps, but mega caps -1. So one tier lower than mega caps. And that's why at the index level, you might not see a complete tear away, and I don't think there is any need to meaningfully revise upside targets. I mean, can the target be beaten by a few percentage points? Who knows? That's always possible.
Yeah.
No, that's an interesting point describing and I think you're absolutely right comparing with how a market would be described in earlier times. But what you would also agree, Dhiraj, is that I mean I don't think there's been any time when there's been this kind of relative outperformance, right? We've had days when when US is down 4-5% and you're up 100-150 points, which is again, as you said, 0.5%, which is 0.5%, but it's strong, right? Given where the rest of the world has been, and we are what, 1.5% away from all-time highs. So I guess this relative strength has also become this very big tailwind, which comes into play quite occasionally. So in any case, Dhiraj, what are you doing out there in terms of recommendations and what you like, what you don't like? Consumption, you said it's interesting because lower end is not doing well, so it throws up interesting buys and sells. Name a few if you can.
I think that's true across the sectors. Across the sectors, you'll find. So broadly speaking, I personally call this period of time as the convergence, the period of convergence for stocks within a sector and across sectors, which was a period of dispersion between 2014 to 20. So 2014 to 20, the strong kept on going up, the weak kept on getting bashed. At this point of time, we are seeing the strong, if it is very expensive, is actually flatlining or declining a little bit. And what was weak between 15 to 21, but they're showing some amount of earnings traction, is climbing up. So it's more like convergence. So for example, within the banking space, I mean, you asked me to name a few. Within the banking space, we have a sell on Kotak and buy on SBI, and buy Access, SBI and ICICI. Many of the large cap consumer names, you have sells largely because of valuations and seeing some amount of demand pressure at this point of time. So, I mean, you're absolutely right. In terms of relative performance, India clearly stands out. But relative performance, a great relative performance does not necessarily mean that we have to raise the absolute targets also by a meaningful amount. I think index is inching up, and this is the time for alpha generation through stock selection. Through proper stock selection, one can actually try and aim for a much higher return than the index, although the index return itself on a one-year basis from where we stand today might look a little pedestrian, but upward direction. I mean, the trajectory is up. India is clearly looking much stronger than most parts of the world at this point of time.
Okay, all right. Thanks so much, Dhiraj, for stopping by and giving us a measured call on the indices. Look forward to chatting up with you soon. Well, for the time being, let's get to another matter.